Welcome back, everyone. We're kicking off this part of the section with our triple play. Now, my pick is Spotify. It's down today, and it has been down over the past year. Now, the streaming company is among dozens of companies joining small business groups in writing to U.S. senators Monday, supporting a bipartisan bill to rein in the biggest tech giants. That's Meta, Apple, Alphabet, and Amazon. And they also urge that a vote be taken. Now, the bill includes proposals to bar companies from favoring their own businesses in search results and in other ways. Now, of course, Spotify is the second biggest music player after Apple Music, and it's also been joined by Yelp and Sonos in that letter. Now, Spotify also announced it's forming a safety advisory council, and that's to get input on issues including hate speech, disinformation, extremism, and online abuse. And that's after all the backlash that we saw from host Joe Rogan and the Joe Rogan Experience when he was accused of spreading misinformation about COVID-19. Yes, the stock is off today, so we're keeping an eye on that one.
Yeah, Rachelle, it's interesting. They said that this is going to be made up of 18 experts, and they will decide whether or not Spotify is going to decide. They're going to pick which issues this team is going to consider and provide feedback. So a little bit different than what we've seen from some of the other tech companies out there, like Facebook, for example, which also has this advisement committee. The advisement committee there actually picks which issues they look into. So Spotify taking a bit of a different approach. We are seeing shares move lower today, but remember all the excitement that we were talking about just last week when Spotify was saying that there's this huge opportunity in podcasts. They called it a 20 billion opportunity. And we saw some pretty bullish statements made from some of the analysts that are looking at Spotify and tracking Spotify. So we'll see. But again, shares under significant amount of pressure so far this year, along with the broader market. All right, let's switch gears here and take a look at Revlon, because Revlon shares are tanking again today. You can see the stock off just around 46%. There's reports that the company is preparing to file for Chapter 11 bankruptcy. That could happen in the coming days. Now, supply chain issues, inflation, stiffer competition, and a heavy debt load are some of the factors to blame here. Last month, Revlon CEO warned to investors that supply challenges were, quote, putting pressures on our ability to meet demand. She also went on to say that rising costs were putting pressures on both consumers' wallets and also the company's abilities and the company's margins. Now, as it stands today, Revlon has more than $3 billion in long-term debt. Again, the stock off just around 47% today, 77% in the last month. And you can see it on your screen, off just around 90% since the start of the year, Dave.
Yeah, and we have seen makeup one of the few things that's been positive coming out of COVID, because people do want to spend on going out on those experiences. And in this case, getting dressed up and getting made up. But that's not the case for Revlon, a company that was a $1.4 billion market cap, now just north of $60 billion. How the mighty have fallen. All right, my play is Tesla, because Tesla CEO Elon Musk talks of a, quote, very rough quarter. In an internal memo, he also urged employees to rally hard to recover. Tesla production has been hit hard by Shanghai's COVID shutdowns. And just as that city of 26 million was reopening, news that most of the city would go back in and endure more mass testing across the entire city. In Beijing as well, the reopening of schools has again been put off as China's COVID zero policy remains in place, and it looks like another outbreak may be upon them. Now, Tesla did have a pretty productive quarter, delivering more than 310,000 vehicles in the quarter. Estimates are for this quarter still around 300,000. Shares of Tesla, though, just getting hammered today and hammered this year, down 7+% on the day and 45+% year to date. Rachelle, they have just been crushed in recent months.
It's true. And it's interesting because despite that, we've seen that RBC analyst Joseph Spack believes that now is the time to actually buy the dip on Tesla. He said that the near-term setup seems favorable. With investors primed for low deliveries, we believe second quarter margins can surprise to the upside. So this might be a wait-and-see story. Obviously, Tesla in a top position right now. We don't know, obviously, how long these lockdowns are going to last for. So they put a lot of eggs in that basket in Shanghai. So we'll have to see how that plays out.
Yeah, most analysts still like the fundamentals of the company, and they are so far ahead of the EV curve, it's hard not to bet on their long-term success in the market. We're going to take a quick